Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, thank you for coming on today.
Thank you for having me today.
Well, now we have another factor in global stocks, and that's Trump announcing new tariffs on steel and aluminum from Brazil and Argentina. That and some disappointing numbers for U.S. manufacturing. Tell us about that.
Yes, with those kind of news, the U.S. market has shown quite a bit of a decline yesterday. The Dow was down 0.96%, the S&P 500 was down 0.86%, NASDAQ was down over 1.1%. As you said, the U.S. President Donald Trump said that on Monday that he will immediately restore tariffs on U.S. steels and aluminum imports from Brazil and Argentina. In terms of why he's doing that is because he's saying that these two countries have massively devalued their currencies, and which is not good for U.S. farmers. And because of that, the U.S. is putting tariffs on steels and aluminum. That is kind of a bit of overstating the fact that the Brazil economy was growing at only 1% this year. And as you know, the Argentina is faced with a massive currency devaluation due to the IMF bailout process. That economy was actually shrinking in terms of the growth. So the level of the tariff that was put on, I'm not sure whether that is actually going to be a long-lasting factor. Probably what Trump wants is that the currency to appreciate for the Brazil real and also the Argentina pesos, because the currency-wise it has depreciated well over 30% for Brazil and also for Argentina. As you know, that the devaluation has been quite significant. So we will see some of the things that will happen, and we think that we need to find the actual attractiveness of the South American countries where the current currency-wise, I think that a lot of these companies are making huge profits. And also in terms of the PMI numbers, yes, the U.S. ISM PMI numbers came in at below expectation, and it still remains to be below 50. But as for the IHS market manufacturing PMI numbers, it was showing a very significant recovery, and it showed 52.6 in November. So it's kind of mixed signals, and we don't think that U.S. economy is going to go to a possible recession in the future in any time soon. I think that a lot of these things are actually coming out as a political measure rather than actual economic numbers. So we need to watch and see how this plays out. But it might only cause the temporary volatility of the equity market rather than creating a massive decline in terms of the prices.
Got it. Well, the decline in stocks went beyond Wall Street. Here in Korea, continuing the decline we've been on since last week, and in the region too. What's the story around the East Asian markets?
Yes, as you said, Kospi was down 0.38%, and also the Kosdaq was down 0.78%. And Korea continues to be a underperformer of global equity market in the last several weeks. As you know, that the changes in the MSCI index for the emerging market resulting into Korea's net selling versus net buying of China is affecting the underperformance of the Korean equity market. As for the other Asian market, as you said, the effect is not necessarily for all the Asian countries. If you look at the China, there is uncertainties, but nevertheless, we have seen today slight recovery coming through as the Shanghai index was up about 0.3%, and the Shenzhen index is up about 0.5%. So we think that the Chinese economy is also fairly stable, with some of the numbers that are coming out yesterday on the PMI numbers on both manufacturing and service sector, and both of the numbers were coming in well above 50, which means is that the economy is expanding a bit. So, which is saying that the issues are individually different. The Korea probably faced with a very weak growth rate and continuation of concern regarding the investment cycle. We think that the Korea is faced with a lower growth rate than the intrinsic growth rate. So that is the issue. But as for the overall Asian market and including China, we think that the overall market seems to be fairly reasonably okay, and that the performance of the Chinese equity market should continue in the future.
Well, Mr. Yu, we've got about 1 minute left, but we got this figure out called the GDP deflator, which is at its lowest in 20 years. A lot of concerns about low growth and low inflation. Explain that figure and what the situation is.
Yes, as you said, it is a low growth, low inflation indicator. So clearly there's a concern about the labor changes, whereas the birth rates are lowest and the long-term growth rate potential is lowest. But I think that the biggest reasons why these deflation things are happening is because the actual investment cycle seems to be in negative territories, and that continues. We need more aggressive boosting measures, including rate cut as well as the fiscal policy measures. Without that, we will see continuous lower growth rate than expected.
All right, Mr. Yu, we'll have to leave it there for today. Thanks so much for coming on. We appreciate your insights.
Thank you very much.